The Monetary Policy Commission's decision this month to hold the Bank of England base rate at 0.25% was met with surprise by a lot of those in the property industry, who had suspected that rates may have been on the rise this month. Subsequent to the decision being announced, Mark Carney himself suggested rates will be increasing at some point soon. He said, "There may need to be some adjustment of interest rates in the coming months," adding that, "The probability of a rate hike has definitely increased for over a year since the base rate dropped to its historic low of 0.25% last August. Many borrowers whose previous mortgage deals had ended have been sitting on their lender's standard variable rate, which in many cases was cheaper than their previous deal, and also gave many borrowers the opportunity to move to another product or even lender without any financial penalties." Getty stock mortgage rates are currently low, but could that all be about to change, however, as the lending market has in the past months become so competitive by hanging out for rates to hit rock bottom, and with the interest rate inevitably going to rise at some point, could now finally be the right time for those who haven't remortgaged their home to do so. Brian Murphy, head of lending for Mortgage Advice Bureau, said the benefits of taking advantage of the cheap deals around at the moment are very clear. The opportunity to fix your mortgage rate for 2, 5 or even 10 years at under 2.5% would provide many with a likely significant saving on their current lender's standard variable rate, the current average lender's SVR being circa 4.5%, as well as providing the security that their mortgage payments would remain the same regardless of what the interest rate does over the term of their mortgage. So why aren't more people doing it? There are, in all likelihood, two main reasons. Monday, December 19, 2016. Mortgage advice from the money-saving expert Martin Lewis. There may need to be some adjustment of interest rates in the coming months. Mark Carney, Governor of the Bank of England. The first is that many consumers simply don't believe rates will move upwards in the foreseeable future. There are in fact a whole generation of homeowners who purchased their property in 2008 or 2009, who've never known an interest rate rise. They simply don't remember the shock of 1989 and 1990 when the Bank of England base rate hit 15%, a horror that lurks in the memory of anyone in their mid-40s onwards. So, there is a certain apathy among some younger borrowers along the lines of the little boy who cried wolf, and, regardless of how much money this group could save, either on the monthly mortgage payment or by reducing the overall term of their mortgage, there simply isn't yet the motivation to actually do anything. Getty stock interest rates are inevitably going to rise at some point. The second reason is far less complex: procrastination. For this group, it's something they know they should do, but the thought of all the paperwork goes along with the process is off-putting for some who, wrongly, believe it's a very complicated and time-consuming process. The reality is, with the right advice, it's a couple of hours spent filling out forms and talking to a mortgage advisor. Nothing difficult or troubling there, and if someone told you that they could save you, on average, the cost of a family holiday every year for just 2 or 3 hours of your time, wouldn't that be something you'd be interested in? Getty stock lenders are currently very keen to attract the business of those remortgaging their home. Lenders are currently very keen to attract the business of those remortgaging their home, as this group of customers are seen as the least risk, and therefore some of the best rates available are reserved for those who have more equity in their property, due to the fact that they've owned it for some time and have paid off a good amount of capital. Indeed, some of the specific deals available for those who are keen to switch to another lender are very attractively priced, as the latest Best Buy table from Mortgage Advice Bureau shows, but the standout figure has to be that it's currently possible to fix your mortgage for 10 years for less than you could fix for 2 years in 2015. At the beginning of 2015, a typical 2-year fixed rate was 3.19% versus the 2.39% 10-year fix that's available today. For example, that's a decade of certainty about the monthly mortgage payment, regardless of what a post-Brexit economy does to the Bank of England base rate. The thing to remember is that, in most cases, lenders' mortgage rates aren't necessarily tied to the Bank of England base rate, so as the likelihood of an increase strengthens, it's possible that some of the cheapest deals currently available will be withdrawn, even if the base rate doesn't change imminently. With the monthly mortgage payment being the biggest single monthly expenditure for many households, the opportunity to save significantly may not be around for much longer. The message from many lenders is clear: borrowers beware. Follow Louisa on Twitter at Louisa Fletcher.